I now call on Government Order of the Day number 2.
Insurance Prudential Supervision Bill, first reading.
Mr Speaker.
I call the Honourable Bill English.
Mr Speaker, I move that the Insurance Prudential Supervision Bill be now read a first time. Mr Speaker, at the appropriate time I intend to move that this bill be referred to the Finance and Expenditure Committee for its consideration. And I will just outline the main features of the bill, but just point out, I think, one small fact of history to the member who was speaking, that actually the problem with what Mr Muldoon did in 1972 was make superannuation too generous, completely the opposite of the way it was represented by the Labor member. Mr Speaker, this bill will be administered by the Reserve Bank as part of its government-appointed role as prudential regulator of our financial services sector. The bill will deliver comprehensive prudential regulation of insurers carrying on insurance in New Zealand. All insurers operating in the New Zealand market will be required to be licensed and supervised by the Reserve Bank and comply with minimum prudential requirements. The introduction of this legislation is another significant step towards achieving clear, robust regulatory arrangements across the financial sector. It will replace outdated and disjointed legislation, fill gaps where no prudential regulation currently exists, and remove inconsistent legislative application between different insurance sectors. Unlike certain other parts of the financial sector, the New Zealand insurance industry is not generally perceived as an industry in distress. However, the flow-on effects of the global financial crisis will inevitably have impact on the value of the investment funds, and so it's timely to be introducing regulation that sets clear prudential standards. In addition, the bill brings the regulation of insurers into line with established international benchmarks and expectations. We believe this will increase the confidence of offshore observers and participants in the New Zealand market and improve the confidence of the public in the insurance industry. The proposed legislation exists as a standalone bill in its own right, rather than an amendment to the Reserve Bank Act. The powers conferred on the Governor-General, the Minister of the Reserve Bank, under this bill must be exercised for the purposes of promoting the maintenance of a sound and efficient insurance sector and public confidence in that sector. These purposes will be achieved by establishing a system for licensing insurers, imposing prudential requirements, providing for supervision by the Reserve Bank of compliance with the requirements in the bill, and conferring certain powers on the bank to act in respect of insurers in distress or other difficulties. The bill will have reach over all insurers operating in the New Zealand market. It will include life insurers, non-life insurers, health insurers, and discretionary mutual providers of insurance services. Although it is obviously designed to deliver effective regulation, it is comparatively light-handed in its application and intended to deliver regulation that doesn't mire the industry in a compliance mentality. It contains a strong emphasis on director and senior officer obligations and accountability, intended to be reasonably self-administering for compliance insurers once implementation is completed. The bill recognises a number of the realities of our market, including its small size, significant diversity, and deals with these by marginally varied requirements between differing categories of insurers. However, there is also a strong focus on competitive neutrality in the application of regulation to insurers. In addition to the licensing requirement on all insurers, the bill proposed that all insurers, except for a limited class of small friendly society insurers, will be required to have a financial strength rating from a rating agency approved by the Reserve Bank. All insurers will be required to have satisfactory fit and proper assessment programs for directors and relevant senior officers, and satisfactory risk management programs governing their day-to-day operations. The bill will contain capital and solvency requirements to apply to all insurers, derived from a risk-based approach that takes into account the specific situation of each insurer. A minimum capital requirement will apply under the solvency standards. life insurers will be required to maintain statutory funds for the protection of funds allocated to long-term policyholder liabilities. There will be enhanced financial reporting requirements in all insurers, and a requirement for all insurers to have an appointed actuary to assist in this reporting. All insurers will be required to produce an annual financial condition report to both the management and to the Reserve Bank as a regulator. The Reserve Bank will be required to approve all transfers of policyholder liabilities and amalgamations between insurers, and amended legal requirements are included within the legislation to increase the efficiency of this process. The bill provides the Reserve Bank with broad-ranging information gathering powers appropriate to the role of the industry supervisor, and empowers the bank to have an active role in respect of insurers in financial distress. This will include an ability for the Reserve Bank to participate in insolvency procedures and, in extreme circumstances, statutory management. Development of this bill has been assisted by an extensive consultation program involving stakeholders across the insurance industry and providers of related support functions. Consultation included a release of the draft bill in April 2009, attracting more than 90 submissions. The Reserve Bank has also been in close dialogue with relevant overseas insurance bodies, including the International Association of Insurance Supervisors and the Australian body APRA, as well as other New Zealand government agencies. There is general industry acceptance of the need for prudential regulation of insurers and general support for the direction taken by the bill. Mr. Speaker, in conclusion, this bill broadens the ability of the Reserve Bank to promote a sound and efficient financial system. It is a significant step forward in terms of updating the regulation of insurers and improving a transparency and clarity of regulation in the sector. And it is my hope that it will lift public confidence in an industry which is characterised by complex financial arrangements that are often difficult to understand. I suspect, as a result of comprehensive consultation, that we will have a strong degree of support for this bill being referred to Select Committee.